Crazy about my money. Crazy about my money.
Hi, welcome to M.A.L, Moagi Accounting Lesson. My name is Mr. Moagi. Please like, subscribe, and leave your comment on the comment section. Today we are focusing on bank reconciliation statement. Bank reconciliation statement. Now, this is introduction to bank reconciliation. This will cover grade 10. Not grade 10, it's grade 11, actually. Grade 11 and 12. Because in grade 10 is creditors and debtors reconciliation. However, right now we're focusing on bank reconciliation. Now, when you do your bank reconciliation, you need to understand the reason why you are doing a bank reconciliation. You're doing bank reconciliation to ensure that the balances in the business books and the balance on your bank statement are the same. So when you get your bank statement, the balance that you have at the end in your bank must correspond with the balance in your cash receipt journal and cash payment journal, which are the books of the business. So what will happen is that you have your CRJ, which is cash receipts journal, right? And then we also have what we call the CPJ, which is cash payment journal. Now we have also what we call a bank statement. Bank statement, it is the statement that you get from the bank. Bank statement. Now your bank statement will come looking like this. Sorry about that, not a good draw, but I'll try to make it simple. Come looking like this. It has the credit side or the credit column and the debit column. Good. So you will see your bank statement looks like this, and we have the description here of whatever that is taking place on that day. Of course, it has the date somewhere here. Now here are the balances. Every time money goes in your bank, the amount will be shown on the credit side to show that the bank is credited. Every time someone deposits money to the business account on the bank statement, it will show on the credit side of the bank statement. Every time you make a withdrawal or you pay someone payments, the amount will show on the debit side to show that money goes out. All the time, money goes out. So from time to time, we confuse the bank statement and the bank as an asset, right? A bank as an asset, of course, it will reflect that money comes in, we record that on the debit side. And when money goes out, we record that on the credit side. That is a different conversation altogether. We're talking about bank as a bank account, as an asset when you do that. But then now we're talking about the bank statement. According to the bank, when money goes in, it is their liability. When money goes out, it is good for them because they are holding less of your money. Does it make sense? I believe so. Right now, moving forward, what will happen is that in your books in the business, every time someone come and buy for cash, you record everything on the CRJ. You record all that amount in the CRJ. And every time someone every time the business pays someone, either they're paying clients or they're paying supplier, they'll record that in the CPJ to show that money goes out. They are paying cash payment journal. Now, before we do our bank reconciliation statement, First of all, we need to find errors between the business and the bank. Who made a mistake? So by doing that, we will start comparing the two. We'll compare our books and the bank statement. So now, when we compare the bank statement with our books, we start by comparing our CRJ. And then when we compare our CRJ, we're going to focus directly to the credit side of the bank statement. Why? Because every time money goes in or comes into the business, we record it on the CRJ. And on the bank statement, it will reflect on the credit side, which means your account is credited. So now, let's say, for example, just gonna use a simple example. Mr. Moagi paid, sorry, Mr. Moagi paid, Mr. Moagi bought goods and services from the business, which means money came into the business. The amount is there showing. You're gonna see that amount should be showing also on the bank statement, and he paid using the EFT. Then we make a deposit as a business. Money will show on the CRJ again, and it will show also on the bank statement, basically. Now, if you check, there's one amount missing. Someone came and bought for cash in our business, and that amount is showing on a cash receipt journal. But unfortunately, there is no transaction on the bank statement, which means the amount was not deposited as yet. So what will happen, we're just going to circle that amount so that we're going to deal with it when we do our reconciliation. In this case, we recorded the amount, but in the bank statement, it is not showing, which means we need to notify the bank to notify that. We have to fix that under in our bank reconciliation statement. We will include that amount in the bank reconciliation statement. Now, moving forward, we have now CPJ. CPJ is every time when we make payments. Let's say the business make payments towards water and electricity. What will happen is that now the amount will show on the CPJ because the payment. And we compare the amount and the bank on the CPJ with the debit side or the debit column of the bank statement. So now the amount for electricity and water is reflecting this. And then let's say we have what we call payment for insurance showing on a CPJ, and it's also showing there on the bank statement. However, should it happen that now we are now, just a moment. Okay, now should it happen that we see there is an amount on the CPG and then it's not showing on the debit side of the bank statement. Like for example, we have two amounts that are showing there, but they're not reflecting on the debit side of the bank statement. What will happen is that now it simply means that we did record, but the bank made a mistake. We want to fix that in our bank reconciliation statement. So what we're going to do, we're going to circle the amount and circle the amount. Now let's just say, what can we find in the bank statement that is not reflecting in our books? Normally, it's what we call the bank charges. Bank charges. Bank charges is simply mean the bank is charging you for keeping your money. So it will reflect on the debit side because of an expense. That one we won't see. We won't see it in our books because we'll only see that when we receive the bank statement. Therefore, we're going to circle the amount, which means we're going to fix this when we do our CRJ, fixing the mistakes. Now, moving forward, we have again, what can we have? Or we can have interest income. Interest income. You will never see your interest until you see the bank statement. So the interest income is an income, which means it will reflect on the debit side of the bank statement. Therefore, we're going to circle that, basically. Now, moving forward, what is the next step from now going forward? What must we do now? It's very simple. We need to draw now our CPJ and CRJ, cash receipt journal and cash payment journal. So why are we drawing this again? We are simply trying to rectify all the mistakes that we did not record on our side. And we are going to also compile what we call a bank account. Bank account. The ledger account for bank. Before compiling our bank reconciliation statement. Then we're also going to look at what we call the bank reconciliation statement. It will look exactly like your bank statement. Debit side, and the credit side. Good. Now, before we focus on the bank reconciliation, we need to fix our mistakes on the CRJ and the CRJ and the CPG. We have to look at what did we do wrong, and we record that on our books. So what will happen now? We're just gonna fix our problems. We're gonna look at, okay, what is it that we did not record? We have bank charges. We record that on our CRJ. And then we're gonna go again, because bank charges, these are our expenses. Then we're gonna go to our CRJ. We're gonna look at all the income that we received but we did not record on our books. Then we go check on our bank statement. We see interest income there. So interest income. I'm gonna show that on our CRJ. Recorded. Done. Right? And then we add everything. Total everything. Total everything on our CPG as well. Sorted. Now, after totaling this is the total from the CPG. This is total expenses. So now we need to do what? We need to simply do our ledger account, so that we can now take the information straight to our bank reconciliation statement. So normally what will happen for the introduction purposes, because I don't want to make it complicated. I just want you to understand what is required of you, so it makes sense as you continue with it, right? So we fixed the error that we did on our side, and then of course when we fix the error on the bank side, we're going to focus on the bank reconciliation statement. So now we're about to complete our bank account. We have the debit side and we have the credit side of the bank account. So this is a ledger account. It is always going to be like this. So on the bank account, you know that the bank is an asset. It will show the positive on the debit side. It shows the negative on the credit side. So normally we have what we call additional information. If you are given an activity or writing an examination, then you have to focus also on the additional information. For introduction purposes, they will normally tell you that the bank account in the general ledger has a favorable balance of this amount on this day. You understand what I'm saying? Or it has an unfavorable balance on this day. So in this case, let's just focus that the bank account, it has a favorable balance on the beginning of the month. Okay, so if it has a favorable balance, it simply means the bank account, it has a positive amount. You understand what I'm saying? So which means now when we do our ledger account, we start with the balance brought down, and the balance broke down, let's say for example is 9,000. You're gonna put it there. This information, remember, you take it from the additional information that was given to you, right? And then now what will happen, the next step from that, it will be now we need to take the total. On the debit side, we're gonna record the total receipts. Total receipts, we take them from the cash receipt journal. So in this case, let's just say we recorded all the cash receipt journal, or we fixed all the mistakes, and then we added everything. This is the total receipts. You see, so you take it as it is, you take it here. You record it on the debit side of the bank account, because it's an income, money came into the bank, right? So this, when we do our ledger account, we're dealing with the bank as an asset. Makes sense. Good. Now, we go to the credit side of the bank account. Of course, negative simply mean money goes out. Then we're going to take all the total payments. We're going to take all the total payments. We take total payments from our cash payment journal. So after adding all activities and errors, we're fixing all the errors. We're going to have total. We're going to add all the amount together. We're going to have our total. This will be your total payments. Total payments. Now, this total payment, you take it as it is straight to your credit side of the bank account. Now, as usual, when you do your ledger account, you need to close it at the end of the day. Let's say, for example, in this case, when you add the balance brought down plus the cash receipt journal, the amount is small. Let's just say it's 10,000, for example. Let me just write 10,000. Let me just use a little bit of figures so that it becomes easier. All right, then if this side is bigger, then we're going to use it to balance both 10,000. Therefore, our balance carried down. Let's say the total payments are less than 10,000. Let's say in this case it's like 5,000 rand. So if it's 5,000 rand, for example, which means we're going to say, oh, 10,000 minus 5,000, so you're going to get your 5,000, which is your balance carried down. Why do we call it a balance carried down? Because this is the new balance that we are having in the bank. So we take this amount straight to the positive side. It's going to be the new balance brought down, which is 5,000 rand in our example. There you go. This is the new balance that we have in the bank account. We good? I think so. Now we're going to move straight now to our bank reconciliation statement. So now when we do our bank reconciliation statement, because we are reconciling, we are fixing the errors that the bank did, we're going to start with the balance at the end on our bank statement. Let's say, for example, on our bank statement, the balance was a positive amount. It was reflecting on the credit side. Remember, I said to you that the bank statement, it will show the amount that we receive in the credit side. So the bank statement will always be like that. You understand? Do not confuse the bank statement and the bank account. These two things are two different things. This is the bank account, is an asset. This is the bank statement. To the bank, we are a liability. Every time they have our money, it's like they are holding our money. It's their liability to them. Every time when money goes out, they decrease their liability. Therefore, that is a reason why on your bank statement, the amount will reflect on the credit side every time we deposit money. So now, in this case, let's just say we have a credit balance, which is a positive amount, a favorable amount as per bank statement. So when you do your bank reconciliation, you will take the amount first that you see there and start with it because we are fixing the error. Let's say the balance in this case is like 3,000 rand according to the bank statement before the errors were taken into account. We take this amount as it is. It's going to be our opening balance when we do our reconciliation statement. In this case, we're going to say credit balance as per bank statement. In this case, in our example, we have 3,000. Are you following? I believe so. Now, let's say we have deposit, or a client came and pay us in cash, and that amount we did not show it in the bank, or didn't deposit it in our bank. This amount will be an outstanding deposit, which is this one. This amount was not taken, it was not reflecting in our bank statement. As you can see, it is circled. So we're going to start with our outstanding deposit. Why do we call it outstanding deposit? It simply means a customer came and paid in cash, but then we did not deposit the amount into the bank. That is why it's not reflecting in the bank. Now we are fixing the problem. In this case, let's just say, for example, the outstanding deposit is outstanding deposit because of money comes in. Let me not use the figures. Let me just do this. right? Outstanding deposit. There it is. Took it as it is. If you're following, there. Outstanding deposit. Where did you take the outstanding deposit? From the CRJ, cash receipt journal. Good. What else do we have to do? Because now we are fixing the error. Let's say another example would be outstanding EFTs. Outstanding EFTs, right? We paid someone using cash, but then now we did not show the amount in the bank, or the bank wouldn't know about the amount because maybe, for example, we did not notify the bank that we took out money from us and we paid someone using cash. You see what I'm saying? So we're gonna say outstanding EFTs. Outstanding EFTs. Why do we call it outstanding EFTs? This is the electronic funds transfers. So what happened is that we paid someone using cash, but we did not notify the bank, so the bank wouldn't know about that. So we need to show that on our bank reconciliation statement. At the end of the day, it should balance, right? So we will take it. Let's say this one, the first payment, we paid someone using cash. We're going to show it on our debit side. That amount will be reflected here. Another one, the second one, let's just say is another EFT number. Let's just say is given a number, EFT number 94. Just an example. This EFT is here. You need to show it exactly there. The second EFT. So you see now, this now is taken care of now. This one is taken care of. This one is also taken care of. Finally. Now we have our bank reconciliation statement almost done. So the last part now, it will be the balance that we managed to get from our bank account. What is the balance broke down in this case? The balance broke down in this case is 5,000. It's the new balance. So the amount, as you can see, it is on the debit side. Are you with me? So we're gonna say debit balance as per bank account. As per bank account. This is the bank account. So we show it here. At the end of the day, when we add this side, the credit side of your bank reconciliation, and the debit side of your bank reconciliation, the amount should be the same. It should balance. It should balance. The balance should be the same. So it will make more sense now when we are engaging in an activity. So join me next time in my next video where I attempt activities, so that you can now deal with it using real figures, not these examples. Then it will make more sense, and even you will achieve a better understanding. Thank you very much for watching. Let's meet again next time.